Alright, Assalamualaikum warahmatullahi wabarakatuh. I'm back now. Alright, so today's topic I will continue on chapter leverage. Okay, I explained to you we have two subtopic on this chapter. Leverage. First is you need to find what is the best optimal capital structure that give you higher EPS. But now for this subtopic, leverage, the second subtopic, I will teach you all how we want to find break even, degree of operating leverage, degree of financial leverage, and degree of combined leverage. Okay, so you see all this term. So what you are talking about now, what you want to measure. Alright, just to inform you, what is DOL? Just to remind, just as a refresh for you all, if I teach in class before this, what is degree operating leverage, degree of operating leverage? You want to see the impact. Alright, refer to the yellow color. We want to see the impact of sales towards EBIT. You see, sales towards EBIT means that when sales increase 10%, what happened to your EBIT? Is it necessarily that, alright, when sales increase 10%, EBIT will also increase 10%? No. Alright, why? Because how we control our costs here, our variable costs and our fixed costs. So this element we consider that we want to measure how is our business risk, how we control our operation costs. Alright, the first part. Alright, before I explain more further, remember I told you from the early semester, please memorize the format of income statement. Okay, from EBIT to EPS. Alright, so for this chapter, you need to start with sales minus variable cost. You get your contribution margin. CM is what, class? This is considered as contribution margin. Your VC is what? Variable cost. Alright, so this is variable cost and this is fixed cost. EBT, earning before tax, EAT, earning after tax, earning available for common stockholders, and earning per shares. Okay, I have explained you in the class before this about this format. So what you are talking about, we have divided by three parts. First is from your sales, as I explained just now, from your sales to EBIT. We want to see the impact when increase the sales or decrease in sales. What happened to your EBIT? Is it will increase the same amount of increment? No, no such thing, because you need to calculate. That's why we're using degree operating leverage. DOL, I repeat, DOL is between sales and EBIT. Okay, you want to see the impact. I repeat, the impact of the sales towards EBIT. The impact of changes in sales. What happened to your EBIT? Is it increase 5%? 10? Is it increase the same amount with the sales? No. That's why we need to measure. Alright, so this we can consider business risk as well. How when sales increase 10%, suddenly your EBIT increase up to 20%. So that's why you can measure your business risk, how you control your operation costs. I will explain further in later. Okay, next, you also will measure on degree of financial leverage. Just now you are talking about business risk. Now you are talking about financial risk, because relate to financial costs. And I mentioned to you before, in the cost of capital, we have bond that you need to pay interest. If you issue preferred stock, you need to pay dividend and common stock as well. Alright, class. So all that's considered incurred cost to the issuer. So financial cost, class, is between, we want to see the impact. For DOL is from sales to EBIT. For DFL, degree of financial leverage, is between EBIT and your earning. Okay, EAC or EPS, either one. Certain question they only give you up to year, or EAT, it depends. What I mean now, we want to see when your EBIT increase 10%, is it your earning or earning EPS or EAC or EAT also will increase 10%? It's not necessarily. So that's why you need to calculate. Alright, sometimes when your EBIT, earning before interest your tax, before you deduct all your financial costs, you realize that, oh, EBIT increased 10%. It's not necessarily your earning also. Earning after tax, earning available common stocks or EPS will also increase 10%. That's why you need to calculate, because as I told you, EBIT increase 10%, probably your EPS will increase 5% only, or 25%. It depends on how you control your financial costs. Yeah, your interest, your dividends, and your tax as well. So class, you need to know. Alright, so degree of financial leverage is between your impact EBIT towards EPS. You want to see what, class? Correct. You want to see what is the impact, changes of EBIT towards your EPS. Alright, so that is your DFL. So what is degree of combined leverage, or you can consider as degree of total leverage? This we want to measure both risks as well, business risk and financial risk. Business risk is more to operation cost, how you control it from sales to EBIT, and financial risk, how you control your financial cost from EBIT to impact towards your EPS. But now, for degree of combined leverage, we want to see the overall, the blue color. Okay, DOL is green, yellow, DFL is green, and your DCL is blue color. We want to see either sales increase, okay, sales increase 10%. So now we want to see the impact towards your EPS. It's different, class. Remember, when you want to measure what is the impact when sales change towards EBIT, correct, you need to use DOL because this is sales and EBIT, the relationship. But if I want to see the impact on EPS if EBIT increase, so that is between EBIT and EPS. If I change the question, I want to see the impact on EPS if sales increase, so you need to use DCL because DCL measure between your sales and your EPS. Alright, just remember, class, this leverage, you want to see how you control your business risk and your financial risk as well. Okay, now I want to recognize you few formulas in this chapter. Break-even point in unit. Okay, why I have two options here? It depends on the question. Alright, so this is based on if the question provide you information per unit. Okay, this is based on the question if the question give you total. Alright, refer to on my right side now. For this one, okay, now sales is 160,000, variable cost is 60,000. So this is considered as what, class? This is total, so you need to use this. How I want to differentiate, is it totals or per unit? If per unit, the question will provide you like this: variable cost per unit, and then selling price for each unit. So if you have the information of per unit, so you can use this formula. This is for what, class? Correct, it is for question that provide you per unit. But how about if the question give you like this, as I shown you just now? You see, total, you didn't see any per unit. Can I know how much one per unit? No, at all. So you can use this OR formula, the second one, the brown color. So this if give total sales and variable cost. Actually is simple. You need to know the formula, you need to know the format of income statement, what minus what, and then you only sub the you only sub the number into the formula. As I give an example to you by using which one formula, class? Yes, for this question you need to use the brown color. Okay, total fixed cost. So what is fixed cost? Yes, 20,000. Divide by total sales. This is your sales, 160, minus variable cost. That's all. And then the answer that you get here, you need to times with total sales. As a direct question, class, you only need to know how to extract information. That is my main point here. So next, this is more to break even. I mentioned to just now, class, what is break even? Break even is total revenue equal to total cost. No profit, no loss. That is the minimum amount of the quantity that you need to sold to cover your costs. means that no profit. Okay, alright, that is break even. So okay, how we want to calculate the impact? As I just know just now, when sales increase 10%, can I know what is my EBIT? Is it increase 10% also? You have to use what? Sales and EBIT? Use DOL. So this is DOL formula. It's the same method. If the question provide you per unit, so you can use this formula. Quantity Q is for quantity sold. Okay, I've shown you just now. Quantity Q is for quantity sold, and then P is price per unit. V is variable cost. Actually, it's your VC there. Variable cost per unit. I repeat, this is all per unit except fixed cost. I believe that you have learned in management accounting. Alright, fixed cost is for no such thing on per unit. Fixed cost in total, but others is per unit. Q is quantity sold. Or if this question did not provide you any price per unit or quantity sold, so you can use this formula as well. Total sales minus variable cost divide by total sales minus total fixed cost. Then you get your answer. I will explain later how to explain your answer. Remember, class, your answer for this question, for every answer that you need to calculate, you need to explain what is the significant meaning of the answer. Next, DFL. Correct, class. Very good. It is between. Do you want to see the impact of when the changes happen to EBIT? What happened to your EPS? Is it increase also 10%? Is it the same increasing? No such thing. So you need to calculate first using what? Perfect, class, degree of financial leverage. Okay, so as I told you, you need to explain the answer. I will show you to my next video. Alright, I will apply this formula in the real calculation later in my next video. This is just an introduction. You need to know operating leverage is more to business risk. Financial leverage is more to measure on the financial risk part between EBIT and EPS, because between EBIT and EPS consists of financial costs. Okay, class, degree of combined leverage. Correct, class, is between sales and EPS, combined measurement of two risks, business risk and financial risk. So the formula is simple. The answer that you get from your DOL just now, you need to time multiple with your DFL that we have calculated. The answer correct. You need to explain on it. Alright? So this, you just get the indicator. What I mean of indicator, you get the answer that you get from DOL, DFL and DCL, just the indicator. But to find the changes of EBIT or EPF, alright, you need to use this formula. Sale, the percentage sales increase or decrease, you will time either using DOL or DFL or DCL. I will explain later to you all which one you need to use, either DOL answer, DFL or DCL. Okay, so question, I give an example to you. Question will ask you like this: sale increased by 20%. What is the effect of EBIT? So what do you have to use? Perfect. When sales increase 20%, 20% time with what? If sales and EBIT, correct, you use DOL. If sales and EPS, you need to use DFL or DCL, class. The question give you sales, so use DCL. And don't worry, this is just introductions. I will explain later in the real calculations. Alright, I will try to answer these both questions in my videos. Alright, so because what is the different, class? Perfect, class. This is per unit, but just now it is on total. Alright, that's all for today. Okay, don't forget to see my next video on leverage. Thank you.